What exactly about this inflation picture has you optimistic and or pessimistic?
Well, first off, let me start by saying Steve is a truth teller. Not that any of us aren't truth tellers, but he's a truth teller, and he's got insight. He's got a channel into what's going on in the Fed.
Thank you, Jim.
That makes him worth listening to. And I listened to you yesterday. I wasn't on the show. It's actually easier to listen to you when you're not on the show. You're not in the heat of the moment, right? One of the things that you said, and I just want to focus on this because I think it dovetails with what you're saying today, is it's not necessarily the path, but it's the destination. And I would submit to you that everybody knows I'm bullish on the markets, that the destination in the bull case is the Fed funds rate at 3.5% to 4%. I'm going to add to what you said about the destination. It's when you get there. Meaning, if it is essentially done by the December meeting, by the end of the December meeting, market's going to be okay. Market's going to go into 2023 and say, well, the bulk of it's behind us. We can start to look forward. The question is whether 3.5% to 4% is the destination and whether December is the right time frame. For that, inflation matters. And you're absolutely right. It's not. I mean, Jay Powell 2 weeks ago said, all we've got so far is 1 month's worth of good data. Don't hang your hat on that. We are probably going to get another month next week when we get the CPI, PPI. Now, I don't say that by licking my finger and putting it in the wind, Dom. I say that looking at where gasoline futures are, where
could be negative next
cotton,
week.
From your lips to God's ears.
It could be a negative headline number next week.
There's a long laundry list of why inflation is coming down. Guess what? Having it come down in August is also not enough. I think you would definitely agree with that. But if the trend continues, if it continues into September, into October, that's the path of inflation by which you get to the end of the year and we're in a much more benign place. Maybe it doesn't happen, but right now it looks like it will.
So, Brenda, I'd like to bring you into this conversation now as well. One of the things that we've seen in the markets over the last week or so, ever since Jackson Hole and the market sell-off that ensued in the couple of 2 to 3 days in the wake of Jackson Hole, over the course of this week now, this is interesting, Brenda, because we are now on pace for the major averages to have their first positive week out of the last 4. Growth and value ETFs are now pacing for their first positive week in 4. The NASDAQ is on pace for its longest winning streak now since July. U.S. benchmark oil prices are pacing for their second negative week in a row. And nat gas prices are on pace for their worst week since late June and their third negative week. Is it fair to say or not fair to say that the markets are expecting or are pricing in whatever Fed actions may be on the table already at this point?
I think that's probably fair. And, you know, coming out of Jackson Hole, I was personally surprised at just how shocked the market was by Powell's hawkish comments, because I think if we look at the backdrop, you know, the economy is still very healthy by many measures. At that point in time, we had the market recovering nicely off of its June lows. So there was really no reason, and inflation's still a problem, so there's really no reason for Jay Powell or any other Fed official to come out with dovish comments. In fact, they need to control long-term inflation expectations, and the best way to do that is with their commentary at this point in time. So they need to convince the American public and business community they're going to solve the inflation problem. But I think if we, you know, fast forward to today, I think the market just became a little bit more too oversold. When we look at fundamentals, you know, corporate fundamentals are still quite healthy. I think we've had more and more of this floating of the idea of a 75 basis point cut coming out, and we're seeing signs that inflation's coming down. We'll get true numbers next week. But I think that all, in my mind, sets a stage for providing the market a little more clarity on just what needs to come next. And this, you know, a lot of that depends on how much of an improvement we see in inflation next week and the pace of improvement. And then what does that mean for the Fed going forward? And I think if we are closer to the end of this rate hiking cycle, meaning it's over at the end of this year and then we pause, I think to Jim's earlier point, that is a positive for the market. It certainly would provide us with more clarity on what comes next. And so I think that's, in my view, you know, could set things up to be more positive as the year goes on, certainly as we get more data points about inflation.
So what's interesting about this action now, folks, here, is this idea that if you look at a year-to-date or a one-year chart of the S&P 500, and you look at the lows that we saw back in June, and then you look at the highs on a relative basis that we saw